To start off, what is inflation? Inflation is defined as the process by which the decreasing value of a currency, like the US dollar, leads to an increase in the price of goods and services over time. In other words, inflation is caused by governments printing more money than is needed. And it's also the reason why your grandparents always talk about how things used to be cheaper. Just recently, many experts predicted inflation to significantly rise the next couple of years, as governments worldwide were forced to inject trillions of dollars to help stimulate a stagnating economy caused by the pandemic. However, inflation remained stable, hovering around 1.5% despite the pandemic-induced money printing. But now that economies are opening and consumer spending is picking up, governments face a difficult task ahead. Is inflation good or bad for an economy? To famous economist John Maynard Keynes, inflation is not a horrible thing in some situations and can boost the economy and create new jobs during downtimes. Overall, a low inflation rate stimulates spending, investment, and borrowing, all things essential for healthy economic growth. On the other hand, when inflation spins out of control, it leads to hyperinflation, causing the price of goods and services to rapidly increase while wages stagnate. Currency purchase power decreases and living costs become more expensive. Higher inflation erodes the value of money you've saved, and lower inflation slows the economy as a whole. For example, citizens of hyperinflationary economies like Argentina, Venezuela, and Zimbabwe have to prioritize spending. Otherwise, price level grow rapidly and cause the money in their savings account to decrease in value. Crypto and Bitcoin's role during inflation. Since inflation has been a constant threat to the value stored in fiat, people often protect themselves by investing in assets that maintain their value over time. Historically, gold has been used as a hedge against inflation, but now crypto has become a more popular alternative over recent years. Hedging against inflation. Bitcoin is fundamentally a deflationary asset, which is why citizens of countries with unstable fiat currencies are increasingly using it as a store of value to protect against hyperinflation and rising costs of everyday goods and services. Unlike fiat, crypto can't be manipulated to the same extent by changing interest rates and increased money printing. Most importantly, Bitcoin's supply will never exceed 21 million, which makes it an attractive store of value that is resistant to inflation. While Bitcoin has surged in popularity over the past year, the crypto market's volatile nature continues to be a polarizing topic. The crypto market's questionable volatility. Critics argue that the major reason for the increased institutional money in the crypto market is the overall price appreciation of cryptocurrencies over time. For example, despite suffering a massive drop from its recent all-time high to around $30,000 in July, Bitcoin was still up 2% for that year. In August, the yearly gain rose to 300%. However, after Bitcoin's drastic 45% drop in May, many investors flocked back to gold, viewing cryptocurrency as an immature sector which hasn't proven itself as a stable asset class nor a safe haven store of value. Any asset used as a store of value and a hedge against inflation require a high level of stability and trust. Although it no longer backs national currencies, gold has established itself in the realm throughout history. In comparison, cryptocurrencies have too much short-term volatility to give investors the same confidence they have in gold. In sum, inflation is a complex economic concept that can be good or bad, but the prevailing belief is that it is catastrophic when it becomes too high and spins out of control. Although inflation remained stable during the last year as the coronavirus pandemic kept businesses grounded, It is expected to rise in the near future as spending increases and economies open up. As a result, individuals and businesses invest gold, real estate, and other assets to protect themselves from future inflation. Over the last decade, Bitcoin and cryptocurrencies have shown that, like those assets, they too play a role during inflationary periods.